Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. So this week, you've got some numbers out that could be of interest. Obviously, you've got the FOMC meeting, the biggest, which is on Tuesday and Wednesday. That's the most significant financial event this week. FOMC, the Federal Open Market Committee, or the Fed, likely to raise rates on Wednesday by 25 basis points. Could be the end of the interest rate cycle. I've got a sneaky feeling that we could end up getting another 25 basis point rise, probably somewhere like September, October. Now, looking at core inflation, 70% of core inflation is made up of shelter or housing, and there is seen a slight descent in the cost of shelter, and that's going to impact core inflation. So that's a good sign. Core inflation coming down is a good sign, and that really could define whether the US and whether central banks are going to raise interest rates any further. To me personally, I think the Fed and the other central banks have gone too far, and it's having a major impact on the regular guy in the street, Joe Public. They are feeling the recession more than the big mega companies. On Friday, you've got PCE, personal consumption expenditure, and the personal consumption expenditure, that is the most favored gauge of inflation by the Fed, again likely to come down. So we're going to see a downtrend as regards inflation and interest rates. The main concern, actually, in my opinion, is China. China has a reducing GDP, and I want to correct one of the viewers who came on called Lord Lee. I don't know if he is a lord, but I think he's from China. He said, I said that GDP is going in negative. I didn't say that. I said GDP is falling. It's still positive in China, but it is on a trending down graph. Okay, so you can see GDP in China fall probably to around about, over by the end of the year, to around about 2.5%. They've got major problems there, and the bank in China, central bank in China, is looking to pump in another $16 billion as a stimulus package into the Chinese economy to try and get it going. The Chinese economy is failing at the moment. Even though it's got positive GDP, its overall growth is sinking. It's going down, so keep an eye on that. Looking at financial markets, the DXY dollar index, those of you who are FX traders, is at a 52-month low. Now, it's essential for this bull market to continue that the dollar continue to fall. If the dollar turns around here and starts moving up, I can't see any reason why it will move up. But at the moment, if the dollar was to turn around and start moving up, maybe it's oversold on the technicalities, that would impact the present bull run, especially the technology sector. However, to be absolutely clear, I don't see that happening. I can't see what's going to push the dollar higher at this stage, but there are some outside factors, like on the weather forecast. Maybe it could happen that Russia will expand its war or continue with the restriction on export of grains and commodities, soft commodities from the Ukraine. That could push up inflation, and we could go back to the dollar rising in anticipation of rising rates. However, overall, I see that as unlikely. I think we're going to continue with the rates we're at the moment, with a little bit higher towards the end of 2023. 2024, probably going to see a full-blown recession. The AI chat GPT has a lot more to go, so that NASDAQ bubble, that tech bubble, is growing nicely, ready for it to be popped, and it is going to pop, because I keep saying over and over again, the biggest 7 companies control 55% or impact 55% of the NASDAQ. Okay, that is disproportionate, and that is a major problem. So there is going to be a tech bubble pop at some stage. Don't be caught out. I've also done a reel on Instagram on what is fast markets. There's a lot of mentorship and a lot of knowledge and pro input that you're going to need when trading or when building your business. I'm finalizing my new book on trading, which is just hopefully going to come out in August or September. It's for basic trading, and it's going to give you background to each individual market. Hopefully that will work for you also. As far as gold is concerned, gold I think will probably creep up if the dollar continues moving down. That's the only reason gold will move up, if the dollar continues moving down. If the dollar stops moving down, then gold is going to remain static. So those of you who are gold traders, at the moment it's stuck in the middle between 1900 and 2000. Very difficult to trade when it's stuck in the middle. Either you want to get it to 2000, go short, or you want to get to around about 1900 and go long if you're a gold trader. Looking at oil, OPEC, Russia, Saudi Arabia is going to continue to cut production in order to keep oil up there at a higher level. So oil is again an indicator of recession or growth, but they're going to keep on cutting production to make sure it stays up there as far as oil is concerned. Looking at other stocks, I think Tesla is a sell all the way down to $235 short term, not long term. The reason being is because its margins are under pressure. It's going to increase production, but it's doing nothing about increasing its margins. So I can see Tesla floating down further down to around 235, 240 level. That is, looks like a continuous sell at that level. We'll check out what's going on regarding Tesla. Meta also looks slightly overbought here. I'm not a big fan of Meta, but it looks overbought. Its Threads, which is its competition to Twitter, is not doing as well as they expected, and its signups are much less than initially started off, or initially at the launch of Threads, and that is a concern. And not sure where they're going to go, but if they don't start picking up subscribers, they're going to fail as well, and it'll be another Meta adventure that's cost millions or hundreds of millions, and it's just going to fail. But at the moment, Threads is not getting the subscribers that it should be. That's more or less it for now. You can catch me, subscribe, share, comment, look at my book on Amazon, and look for some good feedback. Have a good day.